Hello and welcome back to All Things Money. I'm your host, David Blain, and during today's show, we've been talking a little bit about the debt limit and implications for the United States. If you missed the first segment, you'll want to go to the website, www.dlblain.com, and there you'll find archived copies of the show, and you can catch up with what you missed. During the second segment, we started talking about there's been some articles in the press recently about some investment advisors and brokers that have been fined for putting people in unsuitable portfolios, or in the broker's case, selling them inappropriate investments. And it's very common out there. You really have to be cautious. A lot of the firms are more interested in pushing product to the individual investor. In fact, if you were to go in sort of the inner workings of a Wells Fargo or Citigroup or Deutsche Bank or these big mega firms, Bank of America, you would see that they refer to the financial advisors as the distribution channel. So how does that sit with you? You, the individual out there, trying to invest your $1 million, for retirement, and you are the distribution channel. That's what you're referred to. The retail investor is the distribution channel. And you're the guy sitting across from you, he may be financial advisor or something like that, but in the boardroom, you're the distribution channel for product. Anyway, so just be cautious out there. One thing that I thought I'd mention too, I try not to talk too much about my own firm because I want the show to be just general education for people. If you want some help, our firm is best designed for what we call delegators, people that, have other things going on. They're running a business, or they just don't have an inclination for money, that they want to delegate it to somebody else. And we take that on. We essentially act as a personal, financial chief financial officer for our clients in running their household finances for them. And obviously to do this, you've got to have a fair amount of money. But one thing I did want to mention is talk a little bit about fees. A lot of times people come in and they say, oh, well, that sounds great. We really don't want to do this. We want someone else to manage our money. We want someone else to handle our estate planning, and someone to tell us what some tax planning, someone to do our taxes. And we say, well, here's what the fee is going to be. And they say, wow, I was with XYZ broker and they never charged me anything. Well, you probably get what you pay for. And that's the point of this, is the guy by the name John Ruskin. I want to read a quote to him. This is so great and this applies to whether you're looking for an advisor or buying a car or a pair of shoes or even suits. But he says it's unwise to pay too much, but it's worse to pay too little. When you pay too much, you lose a little money. That is all. But when you pay too little, you sometimes lose everything, because the thing you bought was incapable of doing the thing it was bought to do. The common law of business balance prohibits paying a little and getting a lot. It can't be done. If you deal with the lowest bidder, it is well to add something for the risk you run. And if you do that, you will have enough to pay for something better. And the guy's name's John Ruskin. Go look it up. I have this quote stuck on my bulletin board because it is so important. And for example, just a pair of decent shoes. I wear dress shoes every day of the year. And so when I purchase a pair of shoes, I go out and buy a fairly expensive pair. But I'll wear them for 10 years, and they last, and they look brand new. Whereas if you go out and you buy a cheap, same thing with suits. They just last longer, or a good quality car. The same thing with financial advice or tax advice. Once again, heed the first part of this. It's unwise to pay too much. So you don't want to pay too much, but it's worse to pay too little. And it just pains me to see when people shop for anything by the lowest bidder. The government's the worst at it, is they do these sealed bids where they're bidding some job for, new barracks for the military or, something, and it's a sealed bid and the low bidder wins. Now, how dumb is that? to just pick the person with the lowest price without any regard to the quality. Anyway, we'll move on from there. One of the most, talk a little bit about gold. We have had gold in clients' portfolios for many years now. Not 50% or all your money in gold, and not buried in the backyard, but certainly a small allocation of gold. Gold has been quite a good investment. We believe that at certain times in certain economic regimes, gold is a good diversifier, and it certainly has worked out well. And right behind, where's the market going, where is gold going, is probably one of the most common questions that we hear. What's the economy doing? What's the stock market doing? What's gold doing? And so I thought I'd take a minute to talk about this. As you know, I do not like making predictions or price targets. I think that is just ridiculous. It's a way to get on CNBC, but that's about it. I mean, it's almost impossible to predict the financial markets. But what you can understand is relationships between different things. And so that's what, when people ask me about that, I believe that the question, can be answered if you look on an inflation-adjusted basis. Well, $3,000, $5,000 an ounce, a case could certainly be made. But more importantly, we think that gold's price peak, you're going to know when the price peak hits by looking at the currency market. That gold's current run has nothing to do with the value of gold, of making jewelry or things like that. I think it's a reaction to the lack of credibility of the fiat or paper currencies of governments and central banks around the world. And so gold continues to rise in value against every currency that we look at. And so when you see that when confidence in the paper currencies return, I think will be when gold peaks, so to speak. And so that's what you want to look for, is not try to pick, $3,000 or $5,000. I mean, who knows? What you want to look at is, when is the confidence in paper currencies going to return? And if it never returns, well, then there will continue to be a large demand for gold. One thing I can say right now today is that the confidence in the paper currency is not returning today. That there's a lot of lack of trust of the paper currencies today. So that's my 2 cents on gold. If you want to know when gold is hitting its peak, watch the currency markets, and specifically watch the confidence in the currency markets. So for All Things Money, I'm David Blain. I hope you'll join us again next week on the same time and same channels. Have a great week.
The proceeding was a paid program. The opinions expressed are not necessarily those of WNBU and Inner Banks Media.